Well, the markets, we had a bit of a dip actually, and that's quickly got bought into. So you have India Bulls Housing Finance. I think you should pull up that stock, the liquidity gush that we're talking about. That stock, in fact, has moved to the high point of the day. It was trading in the red when we started off the show. That's moved higher. And Bharti Airtel, that's the other one. That's moved up close to around 0.5% from the time we started the show. So good going on those stocks. And otherwise, metal stocks, for example, a Hindalco, the stock was closer towards around 290 rupees odd, at its 52-week peak. From there, we saw a sharp correction. And now, in fact, the stock is up close to around 6.5%. So good going out there. On the flip side, well, there are some stocks that have come off the peak. Z Entertainment, the stock is down close to around 2%, and otherwise very, very strong market. And HUL as well as Sun Pharma, both those two stocks are moving lower in otherwise quite a strong market. Well, I think NCC is the stock that we were just talking about. That stock had moved higher on the back of big order wins in the month of March. I think we have the management with us. All right. So I think we have the management with us who's joining us on the show. Okay. All right. Thanks so much, sir, for joining in. Well, we just got this news that NCC has bagged orders of around 4,600 crores. If you could give us, a few details, what does this take your total order inflow for the year FY19? And also, if you could break it up for us with the time duration that you have to execute these particular orders.
Yeah. In the month of March, we got 4,619 crores of fresh orders. Out of these, 3 orders totaling 1,802 crores have come in the buildings division, and 4 orders totaling 802 crores have come in the electrical division, and 1 order of 1,631 crores has come in the irrigation division, and one more order of 384 crores will come in the water and environment division. The total order wins for FY19 has crossed 25,559 crores. Which is the highest order win for the company for the year as a whole. Even the previous year, FY18, we got only 25,304 crores of orders. So FY19 is the highest order win for the company for any financial year, 25,559 crores.
Okay, and do you think it's possible to see these kind of order wins even in FY20, considering that in the first few months we will have the election uncertainty and the code of conduct?
Absolutely, but the first quarter may be a bit sluggish because of elections and all, but going forward in the remaining months of the next financial year, current financial year, FY20, there is a good possibility that order wins will may be maintained at this level. We are also working out our business plan, and definitely we will share with the investors and with the markets.
So, Mr. Murthy, if I look at FY19 and FY18, the order inflow is approximately the same. There's a very small growth, isn't it?
Correct. That is a substantial thing because we thought we will consolidate and we were giving guidance of about 18,000 crores or so.
Okay.
But compared to the guidance, it is far in excess. We have crossed already 25,000 crores.
The last time you joined us, you said that in FY20 you're more optimistic. You're expecting 10-12% growth in terms of order inflows. Do you hold on to that kind of guidance in terms of order inflows as well as revenue growth for FY20?
We are working out the business plan, but now the order book also has improved substantially. Definitely, we are confident that good growth can be there in FY20. But that will be a clear picture will emerge after the business plan is presented to the board and it is approved by the board.
You'd earlier always guided for margins of around the 12% mark, which is what you've been delivering. These also, the current order wins will also have margins of about 12%?
Yeah, absolutely. They are all coming with good margin. Execution time is also good. The average execution time should be, say, around 30 months or so. And being one of the top frontline companies in construction space, we are able to bag substantial orders despite elections.
Okay. And considering that your order book has exceeded your own guidance, so your order inflows for FY19, are the revenues for FY19 also higher than what you had earlier guided? I think your guidance was for about 11,000 crore of revenues in FY19. Are the actual numbers higher than that?
The third quarter numbers were yet to come in, but we are definitely achieving the guidance in terms of top line for FY19. Actual numbers will be known maybe either 10-15 days time. But we are achieving the guidance. We are definitely going above the guidance that we have given.
All right, Mr. Murthy, you just broke up this orders. You told us electrical, buildings, as well as irrigation projects. They were the three verticals that you won these orders. If you could give us a rough margin idea of what are the different margins in all these three segments? Or is it approximately the same?
Yeah, approximately the same. We are looking at a gross margin of about 17 to 18%, irrespective of the division, that we will stick to. And if you look at EBITDA margins, in 9 months we already reported EBITDA of about 11.8%, and that will be maintained in the fourth quarter also.
Okay.
That much I can tell you. And next year also, that is FY20 also, we are confident EBITDA margins will be between 11.5 to 12%.
Okay. What is your L1 status in terms of order inflows?
Right now, I don't have anything in mind, madam, but there is some slowdown in order acquisition in the fourth quarter. Despite that, we got 4,600. L1 position is not available right now. We are a large company and we bid on all India basis. Definitely, the order acquisition, the momentum is likely to continue in FY20 also.
Okay. All right, Mr. Murthy, thanks so much, sir, for joining in and giving us all those details. We have auto sales that are coming in there, and Escorts numbers as well are looking a little disappointing if you compare it with what Credit Suisse was working with. So the number has come in at around 11,900 units. Credit Suisse is working with a number of around 12,800 or thereabouts. So that, in fact, is a bit of a miss by close to around 900 units on a monthly basis. And in fact, domestic sales have seen a bit of a degrowth. Just going by what Credit Suisse was working with, it appears they were factoring in a bit of a growth on a year-on-year basis. And that's not come about. That's why the stock has come off the high point of the day. The exports on a rather small base, they have close to have doubled, but that's on a small base. The problem, I think, is in the domestic units that, in fact, has degrown by close to around 1%. And just going by that, the Credit Suisse number, the absolute number, they would be factoring in a growth on that front. The total sales has come in at with a growth of around 1%. Credit Suisse would have been factoring in a growth of nearly around 5% or thereabouts. So that goes down as a bit of a disappointment as well, Rima.
Okay, we will get into a break on that note. On the other side, we'll talk about the commodities. T. Nyan Shekhar of Comtrends Research and Fund Management will join in.